public sector banks, which are major shareholder is Government of India. The Government of India has advised, has directed, has give directions to the banks to set up a 3-year roadmap to improve their performance and competitiveness, so that the bank should be in a position to compete with private banks, domestic as well as international or global banks also. The efficiency and performance should be improved with a 3-year roadmap within a period of 3 years. The public sector banks to explore opportunities in collaboration with startups and fintech companies to come out with innovative and new products to bring more people into the organized credit circle, so that those who are availing loans should be comfortable, and also recovery of loans also should be comfortable, and the performance competitiveness should be more to the banks. Also, the lenders can co-create products and further expand reach, like giving customized loan offers to those availing direct benefit transfers. Means the central government is giving social welfare, granting social welfare benefits to the beneficiaries directly through their account. The government also advised the public sector banks to reach the people who are covered under social welfare scheme, and also they are availing the benefits of direct benefit transfer, so that the many people can be covered with this, with reaching beneficiaries of social welfare schemes and direct benefit transfer holders. The banks also should focus on both geography specific opportunities such as economic corridors, business sector specific opportunities such as green energy. Also, the public sector banks advised by the bank to concentrate and to focus on specific area geographically, and also specific nature of activity, nature of business for lending like lending to green energy, to improve green energy. The government has suggested to form 6 groups to look and suggest measures for key factors, key areas: customer service, digitization, HR incentives, governance, and collaboration with other financial institutions, lending institutions, domestically and globally. 6 groups will advise and monitor the performance of public sector banks in the not only in the credit sector but also the internal administration, management, and also regulation of loans, beneficiary recoveries also. The public sector banks also to explore collaboration by building and scaling up common utilities and initiatives such as e-auction platforms, cloud platforms, initiatives under the public sector banks alliances. Also, the banks are advised to explore the opportunities in collaboration with other financial institutions like e-auction platforms, cloud platforms, technical with startups and fintech companies, and other lending institutions like non-bank financial companies, other private sector banks, rural credit associations, agriculture credit associations. All these can be brought under the credit cycle of the public sector banks. Also, the government has advised the larger banks to share their best practices with small bankers who they can guide in areas where they need some expertise. Small bankers may not be in a position to spend or concentrate best banking practices, but large banks might have the best practices in banking sector. Those large banks can advise or can guide or can motivate, encourage the small bankers to adopt the best practices in their day-to-day business to improve their business, lending business with efficiency and competitiveness. Also, the another concentration area is the fraud detection. The banks are advised to improve and expedite detection and mitigation of frauds using data analytics, improving the efficiency of existing fraud detection systems, institutionalizing clean and smart banking. All these improvements, all these enhancement, all these collaborations and all this expansion of lending cycle should not be at the cost of fraud, fake, misappropriation, carelessness, negligence. So the bank has advised the banks to adopt the fraud detection mechanism with data analysis and artificial intelligence, cloud management, blockchain technology, and all these technologies can be help the banks to detect frauds and prevent frauds so that the banks can perform healthy and recovery is simple and also recovery is comfortable to the borrower and lender. Banks are further expected to leverage co-lending partnerships for agriculture and offer digitalized banking solutions integrated across agriculture and allied activities value chain. I stated earlier, the banks also advise to find out an opportunities to co-lend in agriculture sector, which is grossly under unorganized sector, and also the many of the farmers could not be reached by the banks and finance institutions. That area, agriculture and unorganized sector, should be covered with the help of co-lending partnerships, self-help groups, and also trading groups, small trading associations, groups. With such institutions, with such organizations, the banks can reach to the lowest level of agriculture, small lenders, small traders, and also street vendors and small and medium enterprises also. These are some of the advices, guidances given by the guidance given central government to prepare a roadmap for 3 years for the performance and competitiveness of the public sector banks, and which can be more helpful to increase the organized lending and cover more and more middle and small lower level people, so that many people will be benefited and also their activities are improved and they are brought under inclusive growth and they are come out of extreme poverty or lower middle class to upper middle class to higher levels.